What is up, guys? My name is Nash and welcome back to the channel. And today I discovered possibly the best growth ETF on Robinhood, and this is going to be the ARK Innovation ETF, and the ticker symbol is going to be ARKK, and this is possibly one of the best growth ETFs of 2020 because it focuses on technology companies. And if you look on the market, really the companies that are making the biggest moves, that are having the biggest gains, are technology companies like Amazon, Facebook, if you want to look at Tesla. And these are companies that have reached all-time highs in 2020. And if you want to look at this ETF, it focuses on those companies that specialize in innovation, which is pretty much technology companies. If you go on Robinhood, you can see that it is trading at about $92, and that is at the time of recording this video. You might be watching this video next week and it might be at, $100. But today it is at $92. And if you want to look on the growth, you're going to see that on the month it is up by about 15%. On the year it is up by 114%. And if you want to look at the 5-year chart, you're going to see that it is up by 418%. So this is amazing for an ETF like this. So this ETF is actively managed, which means that there's someone who goes in and manages the ETF, which might be adding more companies or removing certain companies, so it's actively managed. And when something like that is actively managed, they're going to charge you an expense ratio. And this ETF charges an expense ratio of 0.75. This is good because anything between 0.5 and 0.75 is a good expense ratio. And if this goes to 1.5%, that's when you know that they're just charging you extra. So those are the types of expense ratios to avoid. So you always want to aim between 0.5 and 0.75. So that's kind of like a normal expense ratio for ETFs. And when it comes to the holdings that they have, which is how many companies do they have in the ETF, because an ETF is made up of a bunch of companies, right, that make up an ETF. So they're holding between 35 to 55 companies. And this is because like I said before, it is actively managed. So sometimes they drop, sometimes they add, sometimes, and those companies make up the net assets to be $4.8 billion. And I think this is pretty good for an ETF of that size. So to describe this ETF, I'm going to go ahead and hop onto the website. I'm going to read the description of the ETF. All right. So it says that companies within ARK include those that rely or benefit from the development or new products or services, technological improvements, and advancements in scientific research relating to the areas of DNA technologies, industrial innovation in energy, automation and manufacturing, the increased use shared of technology, infrastructure and services, and technologies that make financial services more efficient. All right, so that is pretty much the description that's on the website. But to kind of summarize all of that, this pretty much means that they invest in companies that are on the come up, right? So a good example would be Tesla, which is a company that's on the come up, and you can see that there's been a lot of hype behind it because that's how much people believe in the company. So this is going to lead me into the top 10 holdings in the ETF. This kind of gives you an idea of what kind of companies this ETF is invested in. All right, so on the screen, these are going to be the top 10 holdings straight from the website of this ETF. So number 1 is Tesla, and everybody knows what Tesla is, and they're holding 10.74% of Tesla. And number 2 is going to be Invitee Corp. I think that's how you say it, but they're holding 7.13%. And number 3 is going to be Square, and they're holding about 6.38%. And number 4 is going to be CRISPR Therapeutics, and they're holding 5.28%. And the next one is going to be Roku, and they're holding 4.94%. And the next one is Proto Labs, and they're holding 3.71%. And the next one is To You Inc. They're holding about 3.44%. And the next one is Illumination, and they're holding about 3.29%. And the next one is Zillow, and they're holding about 3.22%. And the last one is Slack Technologies, and they're holding about 3.07%. Ooh, that was a lot. But pretty much this ETF is a growth ETF that focuses on technology companies. And if you wanted to purchase a Tesla stock and it's too expensive for you, and even after the stock split and it's too expensive, you can just buy into this ETF and you know that you're investing in Tesla, which is the biggest holding in the ETF. So I definitely recommend this ETF for people that like growth stocks, but they cannot afford to buy the individual stocks because these stocks have been growing so much, they've become hard to afford. So if you buy into this ETF, you're essentially buying into these expensive stocks at an affordable price. But that is pretty much it for this video. Let me know what you think about this ETF. If you have it, if you don't, if you plan on buying it, let me know in the comment section below. But thank you so much for watching, guys. Make sure to go ahead and hit the subscribe button below if you haven't already. And I'll see you on the next one. Peace.